Why would the owners of Emma Lewisham choose a company business structure? The main advantage of company structures are limited liability of shareholders for business debt. So for an example, if Emma Lewisham went into liquidation, the shareholders would hold limited liability for any of the debt incurred by the company. Another advantage is access to additional capital from shareholders for business expansion. So an example of that would be if Emma Lewisham was looking at a new line of skincare products and they needed additional funds. They would have the additional capital from the shareholders to expand the business. They wouldn't have to sell off assets for cash or go get a business loan. A company is also an independent legal entity from the shareholders, which means the company itself can own and lease assets on its own behalf. Companies do not dissolve if owners sell their shares, and they continue to operate if there's a change in ownership. A company also pays income tax on its profits. Other advantages include taxation, as company rates may be lower than some individual tax rates. Some of the disadvantages that come with owning a company is the time and money required to establish the business. Companies must also comply with corporation acts and other legal requirements. And most companies must hold annual shareholder meetings, prepare financial statements based on accounting standards, and launch all of those financial statements at the end of every financial year. Another business structure to consider for Emma Lewisham could have been the sole trader business. Now, the advantages that come with the sole trader business is it's quick and easy to set up. The sole trader business does not pay separate income tax, as the individual owner reports business income or losses on his or her individual income tax return. The owner has total control over the business decisions and therefore free to choose the direction of the business and its strategies and policies. Some of the disadvantages as a sole trader is the business is not a separate legal entity. If the business is involved in any form of legal dispute, the individual owner has unlimited liability, which means full responsibility for business debt and any legal actions. This business isn't suitable for Emma Lewisham, as there'll be too much work and everything falls on one person only. Another business structure Emma Lewisham could have considered was the partnership structure. Now, the advantages that come with the partnership structure is that it's easy to set up, and they are not required to prepare financial statements in accordance with accounting standards. The partnership itself does not pay tax on income earned by the partnership. The main advantage of a partnership over a sole trader is that the partnership combines the skills, talents, and knowledge of two or more people, allowing the decision-making and workload to be shared amongst the partners. Now, the disadvantages that come along with a partnership business is the unlimited liability. So the partners are fully responsible for all business debt and obligations. Another major disadvantage of a partnership is that it has a limited life form. So the partnership will automatically dissolve if one of the partners dies or withdraws from the partnership, and if there's like a dispute that's not resolvable. Another disadvantage that comes with a partnership business is agreements or disagreements can happen concerning the profit sharing or decision making for the business, and it has limited growth due to the set of numbers of partners allowed to be a part of it. So this is another business structure that wouldn't be a good structure for Emma Lewisham. As the business grows, obviously more shareholders and investors would want to invest in the business by buying shares. So this wouldn't be a good business structure for the company.
A strategic plan is the outline of a business's goals and how they will act towards achieving it. The strategic plan is the guidance they will follow in order to achieve their success. To create a strategic plan, it involves the steps such as setting your business's missions, visions, and goals according to Asana 2022.
The first thing Emma Lewisham would have considered in the company's strategic plan was goal setting. This is the process of setting goals for the business to achieve so that there is always something to work towards. The company's goals can be seen through her mission and vision statements, which has established Emma Lewisham as the global benchmark in the global beauty, as well as her ultimate goal to create a sustainable product that will have a positive impact on our skin, well-being, and the planet.
To achieve this goal, she would consider having a sustainability strategic plan, which is a roadmap outlining what her business will achieve. It will include the actions in order to achieve what they need and what they want while balancing the economic, environmental, and social considerations. For example, the company has promised to use sustainable and 100% natural ingredients and practices to produce their products, as well as being an honest brand so that they are trusted by their consumers. This ensures that all economic, environmental, and social factors have been considered and meet the consumer's standards.
By using this plan, it helps her business be successful as it enhances a positive reputation because it shows their commitment to social and environmental responsibility. As she continues to set clear and achievable sustainability goals and the business grows, it will continually improve the company as it has a clear route for a more sustainable future in the beauty industry. This is because it has a positive impact on the planet and her consumers, which was the desired outcome for her business.
Hi, I'm Shamaya, and I'm going to be talking about how relevant the items list for assets and liabilities are for the small business of Emma Lewisham. Accounts receivable in general is likely to be important for several businesses as it reports on current updates that are prioritized to what they are earned and when. Emma Lewisham's skincare products are presented in a larger beauty retail company. Mecca and Sephora, for instance, provide their products, which accounts receivable keeps both firms aware of all cash flows. For stocks, they are known as an online worldwide business for insights of sustainable skincare products. Global Stockers is a focus of how the small business generates their products and sales. They have applied sustainable use of materials that supports the environment as well. The liability of Emma Lewisham includes accounts payable, bank loans, and payroll taxes. The most important liability for this company are bank loans and payroll taxes. The company utilizes bank loans such as covering short-term expenses while waiting for customers' payments and other source of income. On the other hand, Emma Lewisham's skincare product does not include wage workers but intends to pay for who helps provide and generates their products into perfection.
Hi, I'm Ria and I'm going through the equity and income list. This list consists of Emma Lewisham's current year earnings, capital, and retained earnings. Retained earnings are the most valuable as it is the amount of profits earned after every sale of skincare products after all costs are deducted. The income list includes sales, shippings, and other income. Sales is the largest income factor for Emma Lewisham's, as the sales of skincare products is what generates income for the company, which then increases the assets of retained earnings and therefore increasing the overall value of the company. This includes payments by retail stores that buy Emma Lewisham's products to sell in their own store. The expenses for this company include advertising, rent, and distribution. Since Emma Lewisham is a business that sells its products online, they do not need to buy a physical store in order to sell their products. Instead, they sell their skincare to large retail stores including Mecca, which allows them to generate large cash flows since these retail stores buy the products in bulk. This means their main expense is advertising, as they need to create ads to promote their products to gain potential buyers to come to the online store or physical retail stores.
What decisions could Emma Lewisham make using the income statement and the balance sheet? First, what are the purposes of these two statements? The purpose of an income statement is to show Emma Lewisham's income and expenditure at the end of the financial year. It shows if Emma Lewisham has made a profit or loss for the year after subtracting total expenses from total income. The purpose of a balance sheet is to show Emma Lewisham's assets, liabilities, and equity at the end of the financial year. After subtracting total liabilities from total assets, Emma Lewisham's total equity should balance with the company's net assets. These are examples of Emma Lewisham's financial statements. At the bottom is a prepared income statement for Emma Lewisham. If you look closely, we can see that Emma Lewisham's main source of revenue is sales. As mentioned before, the company relies on the sale of their skincare products. Their products range from face and body oil to different types of facial and skincare products. The sale of these products are reported as sales in the revenue section of Emma Lewisham's income statement. On the right, we have a prepared balance sheet for Emma Lewisham. I have observed that within the asset section, bank is classified as a current asset. This is because the money Emma Lewisham has in the bank will be expected to be used within the financial year. Money in the bank can be used as capital and revenue expenditure, which will help the business operate and grow. It's also a present economic sacrifice for any present financial obligations such as liabilities. What decisions can be made? Both of these statements give an indication to key members of Emma Lewisham, like stakeholders, understand the company's performance at the end of the financial year. The information provided from the balance sheet and income statement are relevant to stakeholders because they provide enormous information about a company's revenue, expenses, profitability, debt load, and the ability to meet its short-term and long-term financial obligations. The information provided should give an indication of the company's ability to pay off their liabilities and can be compared to previous statements to come up with new strategies. An example of a decision that could be made is if the company isn't making the amount of profit they would like to. Decisions can be made to spend more on marketing expenses such as advertising to boost awareness of their skincare products and what makes them unique. If the strategy is successful, then revenue will likely increase.